This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Massar and Tim Stenovec from Bloomberg Radio.
Well, today is the day the world sees the new iPhone. I don't know, it's not like it used to be. Maybe it is. I don't know. We'll talk about that with our next guest. Apple unveiling its iPhone 15 along with a heftier price for the top model. The Pro version is going to remain at $999, but the Pro Max will now start at $1,199. That's up $100 from last year's version. We also saw some new Apple Watches with eco-friendly materials and more. Apple shares, by the way, down 2.3%. Marc Gurman is Chief Technology Correspondent at Bloomberg News. He joins us on Zoom from our Los Angeles bureau. And we got Ed Ludlow, the co-host of Bloomberg Technology on Bloomberg Television. He joins us from Cupertino. Ed, I want to start with you. I've been to a few of these iPhone unveilings back in my day, probably 3 or 4 of them. And, they're always, exciting events. There's a lot of pop and circumstance around them. What's the vibe there today?
I don't know, man. The vibe is strong. I don't know. I think this has all of the energy and allure as every generation event that's gone before it. It was packed down there. And I'm going to let Marc talk about how substantive or not these hardware upgrades are. But the intense interest in the Pro and Pro Max was phenomenal. Gurman, if you're listening, I just held both of them in my hand. And you were absolutely right on every single detail. The titanium sides really jump out at you. It's definitely a lighter weight product, right? But you can feel its durability. And everyone down there in the Steve Jobs Theater is talking about this A17 processor, 3 nanometer tech. Everything that you reported, basically you were spot on with. But I would say, Tim, the energy here, Tim Cook was taking selfies with all of the attendees. It has matched prior events I've been to.
Okay, that's good to know. Hey, Marc Gurman, come on in here and just follow up on that. Ed says everything you reported about these phones was right. No surprises for us. Any surprises for you?
Thanks for having me. I mean, the important thing is now that the news is out and people get to digest it and people are excited about what these new phones mean, both consumers who just want to get the new iPhone in their pocket and shareholders who are trying to see how these new devices will have an impact on the company's stock. I think Apple did what they needed to do today. Certainly, they drummed up a few things with their marketing might. They put that new fancy A17 Pro name on the A17 chip. They talked about some of the advancements there. But if you really take a step back, 10% CPU leap, 20% GPU leap, not entirely significant compared to overhauls to the chip in prior years. The titanium is basically the biggest introduction they had today. One pretty nifty feature that I think wasn't expected ahead of the announcement today is certainly the use of a spatial video camera on the back of the iPhone 15 Pro and Pro Max, meaning you can take 3D video, watch it on the Apple Vision Pro next year. Now, this is not going to impact most consumers, but it's a nifty, cool feature that shows the power of these new cameras. If Ed is still there, I'm curious on the new colors for the Pro versions, what stood out to him.
Yeah, Ed, let's bring you back in here. What's your take on
colors?
Yeah, of the Pro models.
Did Marc say colors?
Colors, yes. I am curious.
No, you're
blue, black,
you're exactly
natural,
right. No,
white.
This was my other main takeaway, because if you put side by side the 15 Pro and Pro Max with the base version 15 and 15 Plus, the 15 and 15 Plus come in these beautiful, vibrant pastel colors, yellows, greens. Nice, if you're into that. I always get a blue iPhone for the Chelsea Football Club. That's just, I've always been honest about that on air. I also use a Samsung, by the way. I'm technology agnostic. But the Pro lines come in a much more limited color range, and that is very clear, Marc, especially when you're inside the Steve Jobs Theater display room and they're all on display side by side. I don't know why they went that way.
Yeah, certainly it's an interesting dynamic with that new titanium frame. What I think that happened here is the titanium allows them to try some new things. One of those things is not polishing with a color the material, which is something you need to do with stainless steel. So they're able to have that raw, natural color for one of the models. I think the blue personally looks interesting. I have the black 14 Pro Max right now, so I don't think I'm going to get the black again. No gold, which could be interesting for some markets. In China in particular, gold is a very powerful and popular color. Red would have been a very popular and powerful color in China, but those two colors are elusive for this generation. Maybe they'll figure out a way to get next year red and gold out there, but certainly color is a big part of this iPhone launch, the overall appearance. I think the periscope camera, the new lens system on the 15 Pro Max is going to be quite impressive and quite useful, but I certainly think that they've done enough to make this a hot seller this fall.
I've always been a fan of the gold or the rose gold. But Ed, Marc was just mentioning earlier too about Apple's stock price down more than 2% as we head closer into the closing bell here. But historically, the product releases initially just haven't always pushed shares higher. What's your sort of view on this for today?
Yeah, look, let's regroup in 24 hours and look at the sell side and investor notes. But go back to 2011, there have been 13 iPhone events, including today's. The stock has fallen on 10 out of 13 occasions in the session on the day that Apple's had an iPhone event. The bar's kind of high. The story with Apple, and Apple has dominated news flow recently, is 3/4 of overall sales decline, guidance that indicated we are heading towards a 4th consecutive quarter of overall sales decline. And in the June quarter, China was a bright spot. Greater China grew top line 8%. With a heavy emphasis on switchers, consumers switching to iPhone either for the first time or from another brand. The news flow and the stories and reporting about China's central government clamping down on iPhone use in the public sector changes the narrative potentially for the rest of the year. But the market doesn't agree to what extent. What we wanted to know was the hardware upgrades and the tech upgrades here, and Marc's really walked us through them. Do they resonate with the Chinese consumer? That's a big question going forward.
Marc, Apple is also set to sell made in India iPhones on its launch day for the first time. What's behind this move?
So yeah, they've been producing iPhones in India for a couple of years now. They've really ramped that up in recent quarters, and so the goal is to get in India the made in India models on launch day for the first time. They've actually sold iPhones in their India stores and in the India online store from launch day in prior years. But according to my colleagues reporting, this will be the first time that the first models will be the made in India models.
Hey Ed, what should we make of the sustainability initiatives that we heard from Apple today? They're making the new aluminum watches, first carbon neutral devices. They're dropping leather from all iPhone and Apple Watch accessories. What do you make of it?
Yes. Yeah, I'm glad that you noticed it, because what was interesting in the lead up to this and indeed during the event is almost every analyst, market analyst, research analyst and investor that I've spoken to was actually interested in that. They buy into the idea of Apple's net zero goal for 2030. But the reason that we focus on it from a kind of markets perspective as well is supply chain. Apple seems to be able to move quite nimbly and swiftly on its supply chain, and they confirmed a number of products today are going to be either net zero from this point on or in the very near term. One of the things I'm going to review on my social media piece that's coming shortly is, they scrapped leather from the accessories offering and are using more sustainable materials on that side as well. It kind of fits with the brand of this company, and as we know, for investors from an ESG perspective, that can count. You see many of the mega cap tech names think about their impact on the world, and Marc reported in the Top Live blog on all of those that you can recap.
Marc, we only have about 15 seconds left, but one of our producers wants to know, are there plans for Apple to lower the cost of the iPhone 14 now?
I believe the iPhone 14 is sticking around on sale, and you'll be able to get them at a cheaper price.
We don't know how much cheaper though, right?
Not yet. Probably $100.
Okay, but Marc, you're still upgrading.
I'm still upgrading.
You have to. You do every year.
Yes.
All right. Marc Gurman, Chief Technology Correspondent at Bloomberg News. He joins us on Zoom from our Los Angeles bureau. Also Ed Ludlow, the co-host of Bloomberg Technology on Bloomberg TV, joining us live from Cupertino.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
Hey, it's Tim Stenovec and Jess. Menton. We're live from the Bloomberg Interactive Brokers Studio here in New York. It is Bloomberg Businessweek, having a fun chat with our friends over at Bloomberg TV, Romaine Bostick and Scarlett Fu. Our next guest, though, a veteran of Walmart and Levi Strauss. If you were listening to us just now, you heard me introduce him already. He perhaps faces his toughest challenge yet, reviving the storied brand of JCPenney. The department store chain filed for bankruptcy shortly after the start of the pandemic. That was back in 2020. Then in November of 2021, Marc Rosen became the CEO. Just last month, the company announced a $1 billion reinvestment plan that focuses on digital and in-store experiences. Very pleased to have with us Marc Rosen, CEO at JCPenney, joining us on Zoom from JCPenney headquarters in Plano, Texas. Marc, how are you?
I'm good. Thank you very much for having me today.
Yeah, it's good to have you with us. Hey, give us an update. It's a privately held company, so we don't get any insight into the finances. We know that the company's planning to hire 20,000 employees ahead of the holiday season, but give us some more numbers we can work with.
Yeah, so like you said, we are a private company, but what I can share is we now have sales that are over $8 billion. We have just over 650 stores across the country. And we also operate jcp.com. So we're serving customers everywhere right now. And the business is really, you mentioned that we emerged from bankruptcy and we emerged with a very, very clean balance sheet in a strong financial position with less than $500 million of debt on the balance sheet. So really financially positioned to drive forward and really reinvigorate this brand and reestablish our relationship and our relevance with our consumers, which is really the core of America.
You might have heard Romaine just a little earlier talking about over the weekend visiting a mall, seeing a JCPenney that was no longer operating, and even having the conversation with his family about whether or not the store still exists. How do you change that narrative and let people know that, yes, JCPenney is here, and we've got 650 stores across the country? How do you do it?
Well, that's actually part of, so you mentioned that we just announced an over $1 billion investment back into the business. And that investment is focused on remodeling our stores and reinvesting in the store platform, putting new technology and new point of sale in revitalizing our online shopping experience and really improving the jcp.com shopping experience, and then also our supply chain. But I would say we're a retailer, and so it all really starts out with product. And over the last couple of years, what we've done is reintroduce over 25 of our brands like Stafford that every customer knows and loves, and a lot of customers grew up with, brands like Liz Claiborne, and brands like Coax in our home area. And so we've reintroduced that product, and now what we're investing in also along with that $1 billion is what we're calling a brand reinvigoration that is centered around really helping our customers make it count. And when we look at our customer, I said our customer is the core of America. It's the school teachers that teach our children. It's the construction workers that build our homes and the buildings we work in. It's medical workers who take care of our families. And that customer is looking for a sense of belonging. They're looking for a place where they can find accessible fashion that they can still get at a great value, because that customer is making trade-offs every day in their life. And so what we're introducing also is a campaign to reinvigorate the brand, centering around how we help our customers make every moment in their lives, whether it's a big moment like their daughter's wedding or whether it's a smaller moment like getting their kids ready for school in the morning. But how do they use the products that we have at JCPenney to make that count, but be able to make it count, but still have money left to put breakfast on the table for the kids.
Hey, Marc, whenever you're talking about middle-income shoppers, and especially with this inflation dynamic, how do you sort of view that as far as how to get shoppers back in when they are trying to figure out where to sort of shift their spending at this point?
Right. Inflation is an issue for our customer. We look right now, we see that our customer is spending over $700 a month more just for rent, for mortgage, for groceries, for gas. And that means that every dollar is even more important to them. And it's more important that they make every dollar count. And that's really what we're here for, is to help them do that. And I think the unique thing that we can bring to the table is we can bring great fashion and great product at a really accessible price to our customers. And that's what they need. That's what they're looking for right now in their lives.
When you talk about technology upgrades to some of these stores, kind of build on that. What more specifically are you doing?
Within the stores, it's a lot of it's mobile and it's point of sale or checkout technology. So we'll be within the store centralizing the checkout, but we'll also be putting in the hands of all of our associates in the stores mobile devices that will help them manage inventory better. It'll help them ship and fulfill online orders. It'll help them check inventory and order online for a customer. Or I talked about centralized checkout. What it really will do is move checkout anywhere so that they can mobile check out a customer anywhere in the store.
Hey, Marc, God, I got so many questions for you. We got 3 minutes left, so we're going to do sort of a, try to do some rapid fire questions. Sales of over $8 billion. Where do more sales happen right now? At the 650 stores across the country or JCPenney.com?
So it's about a 70-30 split, with stores the 70% and with the online business about 30%.
And where are you more bullish?
So both are actually growing, and we're focused on growing both. But I do believe that right now we've done a significant amount of reimagining our online experience and investing in JCP.com, and we think there's significant growth there.
So do you think that is it growing at a faster rate, and like you'll eclipse store sales with JCP.com in a number of years?
The JCP.com business is growing faster than the store business. I don't believe that it's ever going to eclipse. I think you could reach a 40-60 point or something like that. But the reality is what we're seeing is that customers still want to shop in stores. They still want to come in. They want to have that try-on experience. They want to get help from an associate to put together an outfit. And in important areas like we reintroduced beauty, a customer's looking to come in and get help and try product.
When you look at this portfolio, whether it's fashion, apparel, home, beauty, as well as jewelry, where are you seeing spending the strongest, and where do you see people pulling back the most?
It's interesting because if we look across the business, we're really pleased with the growth that we've seen in our home business and in our men's and women's apparel business. And we believe we've gained share in all of those areas because customers are spending there. Our jewelry business is another one that continues to be really strong right now. I think rather than seeing people reduce spending in particular areas, we're actually seeing that within an area, they're being a little bit more selective about what they're choosing. And we are seeing some more growth come from some of our private label brands. For example, in home, we're seeing products like Coax, which is a private label opening price point, small appliance, think like blenders and toasters and things like that, and cookware. We're seeing customers choose that product in some cases because they realize it's great value and they can save money by going for that product.
So are you going to stay a private company forever, or is there an IPO on the horizon?
So right now, we're really actually focused on just driving sustainable, profitable customer growth within the business. And we're very fortunate that we have an ownership group that is aligned with doing that and focused on the long term. And right now, the focus is building that relationship with customers, driving customers back to the brand, and then we'll see where it goes from there.
Marc Rosen, CEO at JCPenney, joining us on Zoom from JCPenney headquarters in Plano, Texas. Hey, Marc, really appreciate you taking the time. Come visit us next time you're in New York.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
A strong heart and a nerve of steel. Viva Las Vegas. Viva Las Vegas. Viva.
Well, for the last several years, people visiting Las Vegas might have been as puzzled as they gaze westward from the Strip. Looming in the distance was a 366-foot-tall sphere. The dark orb bore a familial resemblance to the Death Star, but lacked any signage offering a clue to its purpose. It was obviously an attraction, but what kind? Well, to understand what it is and how it got there, you have to go all the way back to 2016 and to a sketch on a notepad. Devin Leonard is out with a new feature that delves into the convoluted history and promise of what's known as the Sphere. Devin's story is going to be featured in the forthcoming issue of Businessweek magazine. You can read it now, though, on the Bloomberg and at Bloomberg.com/Businessweek. Also here is the editor of Bloomberg Businessweek, Joel Weber. He's with us along with Devin in our Bloomberg Interactive Brokers studio. So, Joel, are you a fan of the Knicks?
I kind of, this is hard to say.
It's tough there.
You did not know that was coming, did you?
Threw him off.
I love basketball. I grew up playing basketball. I root for the Mets the Nets and the Jets last night was heartbreaking.
Oh, I'm sorry about that.
I mean, got the win, but
Mets, Nets, Jets.
Mets, Jets, Nets. It kind of locks you into the rhyme. Like the Knicks
Rolls off the
doesn't
tongue.
roll with that. But look, the Knicks have a very interesting owner in James Dolan, who has owned MSG, and that we have written James Dolan stories because he is not thought highly of by NBA fans, specifically Knicks fans. But what this story was really about wasn't that. And I wanted to approach this story, and I think Devin did a great job of this. He's actually kind of fascinating in that he has other interests, and music's a big one. And he saw this opportunity to basically build something in Vegas that had never been built before. And he had a vision that I think originated more or less with him. And he went and did it. And now it's gonna open, and there has never been a music venue like this. So yeah, it's really easy to hate on James Dolan. And the guy may have pulled off what's basically perhaps we'll find out, a world-class music venue unlike any other, and it's shaped like a sphere, and that's what it's called, right, Devin? The Sphere.
Yeah, I mean, look, this is a guy. He embarks on this thing. He's past 60. He's got all the money he needs. He's the son of a billionaire, Charles Dolan, a cable TV pioneer, and his family already controls some of the world's most famous venues. Some people call Madison Square Garden the most famous venue in the world, and yet he has this idea. He wants to disrupt live entertainment by building what's basically it's a round, it's an orb-like sphere, and it's sort of three different things. At night it's going to be a concert hall with this sort of state-of-the-art sound system, and also this huge LED screen that's as big as, or bigger than I should say, 3 football fields, and they're calling it the highest resolution LED screen.
If you're watching us on YouTube right now, you can actually see the video and images on the screen.
In the world, in the daytime, it's going to be sort of more of a tourist attraction, immersive entertainment. Seats will shake, the wind will blow. They have and they're going to be debuting a movie in October, directed by Darren Aronofsky, the director of Black Swan and Requiem for a Dream. And just to wrap it up, and what you're looking at now, if you are looking at TV, that's the exosphere, the outside. That's going to be a giant billboard, and they're going to run ads on that, among many other things.
You got to see pictures and videos of this thing to actually do it justice. I mean, hearing about it is one thing,
totally,
but this thing is actually really, really cool.
No, that's something that really kind of blew my mind, was that when I went out to Vegas to go take a tour, I stayed in the Westin, which is sort of overlooking it, and I asked them, hey, can I want to look out at the Sphere, because it was 114 degrees.
I got to do it for work.
Right? No, I'm not going to go outside. But I got in there and just looked at it out the window. I couldn't believe it. I mean, that's when again, as I say in the story, a lot of people, were doubting. A lot of people were saying this is never going to work. This is the Death Star, and then they turned it on, and everybody had, people just kind of went nuts.
So why a sphere? What was the inspiration behind it?
That's a really good question. He in 2016, his family just sold Cablevision. They just sold it for $18 billion. And I make a joke in the story. The guy plays in the band. I mean, he could have just gone off and played in the band. And so he's like, he drew a picture, on a notepad, and and told this guy, been the chief technology officer of Cablevision, this is the venue of the future. Let's go out and disrupt the live entertainment business. I don't actually know where he got that idea, but
it turns out that from an engineering standpoint, it is an incredibly difficult.
No, it's insane.
Exactly. To play music in. How did they go about solving that?
Well,
challenge?
It's an acoustical nightmare because everything just echoes inside a sphere. So they found a company called Holoplot in Germany that basically beams audio to using algorithms to different places, to wherever you're sitting. The algorithm's set up, so they're basically measured. They're creating these beams, of sound, and they're measured, so everybody sort of hears the same thing. But that way, since you're sending the audio right to the people, everything isn't just bouncing all around and echoing. And that's just one of the sort of crazy, and I think ultimately expensive things they did, and helps explain why this thing went from $1.2 billion, price tag to $2.3 billion.
Yeah, inflation. That's the thing.
Right. Who's counting?
So wait. There's gonna be a big act that's gonna open this up, and because this is gonna happen, and I mean it's already in Vegas. It's built. They're already doing weird stuff on the Strip.
Right.
Who's opening?
A little band from Ireland called U2.
Oh, I've heard of them. I think Tim Cook will be there.
Yeah, if you're gonna make a splash, like launch with U2. How long are they gonna be opening there?
They're gonna be playing for 25 nights.
And tickets are how much?
I think they started around $150.
Oh, yeah,
but
I'm going.
well, I mean, they're almost all sold out. So I think if you want to go, Joel, you're going to have to look on StubHub, and those prices are.
I mean, it's a good point though, Joel, that you bring up. If it's good enough for Bono, then it's good enough for other musicians, right?
I also just think this is the future, right? Like live event. We know that live events are where artists make their money. If you can make an artist a venue unlike any other. What happens? You could get anybody you want.
Well, they don't have to travel. So I mean, these bands have like these caravans of trucks that they carry their all the equipment around. They take their LED lighting around. They take their sound systems around all these concert halls, and in this case, as from what I'm told with U2 and other bands, they actually have two sets, two caravans that that move in between venues. So when the next one's they're setting up the next venue while they're breaking down the first. Anyway, I mean it's enormously expensive and it's a huge headache, and I guess if they can spend a couple of months in Vegas, some people are definitely going to want to do that. And some of the bands, by the way, that they're talking about are Coldplay and Fish. Harry Styles
I can't wait for the fish heads to.
I mean, the fish heads descend on MSG all the time. So Dolan's got this relationship with Fish.
They know what they're doing. Yeah, you pack that house. Yeah. Okay, so there's also a possibility that Vegas won't be the only place that has a Sphere.
Not if Jim Dolan can help it.
Yeah.
No, they're trying to get permission to build one in London, and they're scouting other locations. But after spending $2.3 billion, they want to change their plans and get partners because he's not going to want to do that again. Yeah. He's already said he's not going to do that again.
Right.
Okay, so Joel, you mentioned that with live music in this day and age, the world of Beyonce, the world of Taylor Swift, people will pay for certain acts and certain experiences.
More than $150.
Oh, for sure.
Roll over.
Yeah. You didn't see me going to Beyonce or Taylor Swift concerts, even though I wanted to. Devin, it was hard to see this coming, like the post-pandemic surge and especially the high prices that people would pay. Talk about the construction of this and the way that the pandemic derailed it, because this thing was in the works before the summer of 2023.
No, because that's the whole thing. They basically leased 18 acres of land from Las Vegas Sands, and they started to build this thing, and then in 2020 the pandemic hits, and it just drives up the cost of steel, computer chips. Basically, as saying the story, just about anything you need to for a multi-billion-dollar development.
LEDs were more expensive. Need a few of those.
Yes, especially for the inside and the outside of the Exosphere. But so that effect, and also it halted construction. They were initially going to open in 2021, so that set them back 3 years. But it was also just all this advanced technology, all these things they were experimenting with. They had to create an entirely new camera just to be able to capture images large enough to fit that screen. They were stitching images together from multiple cameras.
And they had to patent this thing because it's like the quality and size of this image is so big. I think this is like there's like some feats of engineering that went into making this thing. They patented
a lot of stuff. I think the numbers are like 60 patents overall. That's not just the camera is just like 8 or something. So
yeah. So what's it look like, in Vegas? I mean, we saw those images, but like, give me a sense of the scale of this thing. I mean, the Strip is the Strip, and like, is this just you suddenly not realize that the Strip's there anymore, and there's an eyeball, or whatever else they want to make?
Well, it does take your attention away from just about anything else. But I mean, you fly into Vegas. I mean, you can see it from the airport. It's just it's. I think there may be a building or two that are bigger than it, but I mean, it's there. It dominates. From depending on where you're standing. And if that is assuming it's lit up, it's. I guess in certain sense it dominates the strip of the skyline.
I can't wait for the sign that says your ad here. Sphere.com.
So just how complicated was it to get approval to build that?
Well, that's the funny thing is that the approval, it flew through the approval process in Vegas. In Vegas. But in London, they I guess they submitted their planning application in 2019, and they haven't built anything yet. There's a local development corporation that oversees the site, and they finally signed off last year, but they're still finalizing the deal with Dolan's company, and then it goes to the mayor of London, and so he has to consider it. And there's also a Secretary of State in the Sunak administration that might be weighing in on it too. So that's taking forever, and and nothing's been built. So you have two very, very different situations, and also. If they went to L.A., if they went to New York, it'd be much more similar to London than Vegas. In Vegas,
where would you find the space for this in other cities? Like, where are they doing this in London? You need 17, 18 acres?
That's the funny thing, Tim, is that they're building it on a much smaller piece of land in London. I went over there. It used to be a parking lot. It's kind of in between some train tracks, but. It's on a site that was originally sort of set aside for the Olympics in London, but so I guess there is and it's over in East London, I guess sort of a more working class kind of area, but that's a good question. Like, where would you build it, in New York or Manhattan? I have no idea.
Jersey.
Probably over at the American Dream Mall. I was going to say Meadowlands.
Yeah.
I would totally go check this out. Like,
I was going to say, Joel,
it does seem like one of those things. If you're a fan of U2, you will go to Vegas and you will watch this.
It sounds like Devin might need to actually do that because he did. Yeah, go ahead, Devin.
Well, we'll see. No, sorry. Well, that's what cut out. What's got cut out of the story? I interviewed all these U2 fans, including this one guy who'd seen them already more than 150 times. He was going to something like 10 shows. 10 shows in Vegas. There were a couple of guys like that. I mean, they were great, but there was just so much. Yeah. We only had room for so much stuff.
Yeah. Why are the tickets so cheap?
Well, will they remain that? Will be the question, right? We'll see. I mean, this is. I think it's a new thing, and we'll see what the pricing dynamic pricing does yet.
I think it costs like $125 to go to the IMAX to see a movie these days.
Well. IMAX briefly comes up in the story because, this is such a unique venue that you can't even put IMAX films there. Well, maybe they can, but not to start with.
Well, no, but the idea is, to blow IMAX theaters away. So.
Yeah. And I love that they're playing this right now.
There we go.
Give it to us.
Very good stuff, of course, as always, from our team here at Bloomberg Businessweek. A big thank you to Devin Leonard. He is with us from Bloomberg Businessweek magazine. It's featured in the upcoming issue of Bloomberg Businessweek, available at bloomberg.com/businessweek. And thanks, as always, to Joel Weber.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
Jess, Menton, and Tim Stenovec here at the Bloomberg Interactive Brokers studio. Now, with just 20 minutes under that to go before the closing bell, U.S. stocks did lose ground today after oil prices climbed to their highest level of the year. We did talk about Apple earlier, Tim. Those shares down more than 2% after its iPhone 15 event, while Oracle was headed for its worst day in over 2 decades after posting revenue and sales guidance that was weaker than analysts had expected. So big move there. So that's why you're seeing energy higher and then more of these growth-oriented companies and corners and sectors of the market lower. Joining us now to weigh in on all things markets is Katherine Krantz, Chief Executive Officer at the Center for the Macro Specialist Designation. I wanted to start off, Katherine, to tell us about your firm and what it is that you do, because it's really interesting too. This is supposed to be basically a designation that is more complementary to a CFA, correct?
Correct. Thanks, Jess. Absolutely. So our firm is focused on all things macro. So we have basically three ways that we interact with our clients. We have a traditional sell-side research product with our founder, Francois Trahan. He has been a macro leader for decades, and so we sell that product to our institutional clients. Last year, we started the Macro Specialist Designation because we became aware that macro is not something that's really taught anywhere. It's not the same, macro investing is not the same as what you learn in a macroeconomics curriculum in college. And it's really not something that's part of other designations. It's something that you tend to learn getting beaten up by the cycle year after year.
So say tomorrow, 8:30 a.m., Tim and I were talking about this earlier, CPI report comes out. This is different than if you're just reading some of these macro data points that are coming out each morning.
Oh yes, it's different. So basically, we teach our framework, which is rooted in monetary policy, obviously the Fed's moves, and how that impacts interest rates. And we look at how interest rates basically leading indicators like the stock market with about an 18-month lag time. And then that helps us by looking at where interest rates have gone. That helps us anticipate the direction of the market. And then obviously internally, which segments of the market will outperform.
Okay, so given that you're CEO at the Center for Macro Specialist Designation, where are we right now and where are we going? What do you like?
Unfortunately, we do not have a very rosy outlook. Something that we hear continually these days is that the lead and lag times of policy's impact on markets has changed. It's different this time.
So it's longer and more variable?
Well, people are saying it's shorter and we're over any pain. We disagree. We don't see any evidence that it's different. We are just now coming up to the 18-month anniversary of the first Fed rate hike of this cycle. And it has been the steepest, quickest tightening cycle since basically Paul Volcker's days at the Fed. So add into that the already tightening of lending standards you've had due to the banking crisis, and there's a whole lot of tightening in the pipeline that we don't think has been priced in yet.
What pockets within the economy raise some red flags to you at this point? When you do have data, say obviously GDP is backward looking, but when you're looking at that, I know we'll have another reading of retail sales later this week, but some of this consumer spending data has still held up. So where's the weakness coming from?
Yeah, we're not surprised by that. Like I said, we're really just getting to the point where the impact of tightening is going to start flowing through to the economy eventually and stocks in general. You know, we keep a close eye on earnings. It's basically when earnings growth goes negative that things start to get really bad. So we monitor earnings across all segments of the market. You know, we've seen the ISM manufacturing survey is already in contraction territory. So, you know, we think that things are going to deteriorate from here. As I mentioned earlier, obviously the tighter credit standards, which is not something that usually happens until you're much further along into a slowdown. And so the fact that that's already tightened so much it's very concerning to us. So, you know, we're really looking towards everything defensive. You know, what outperforms is boring things like staples and you know, the things that have more stable earnings profiles.
So staples, you know, other defensives. What changes your mind and makes you more optimistic? Like what would you have to see over the next few months to say, wait a second, we actually have the worst of this behind us?
You know, I mean, based on our framework, there's really almost nothing that could change. I mean, we feel like all the tightening is already baked in the cake. It's there. So
it's baked in the cake, but you said that it hasn't been priced in.
Right, but I'm saying that you can't undo it. So
okay.
even if the Fed were to suddenly pivot and lower rates, it then will take another 18 months for that to feed through. Mm-hmm. So we don't see a way out of this. We think it's going to be a tough year.
How much longer do you think it'll really be able to tell in the economy from the full effects from the last 18 months and the 11 rate hikes that we have seen since March 2022?
Yeah, well, we think this is going to be a story that covers really most of 2024 because, as we said, it's been the steepest, most intense tightening cycle. And so given that we're only coming up on the 18-month anniversary of the first hike, we have a long tail to price in. So we think that's going to take some time to play out.
What do you think are some of the risks to your case for the economy, to the flip side of that argument?
Yeah, I mean, look, we don't really like to ever say it's different this time. You know, we do stick to the framework, but, you know, there's always a chance that things could could evolve and change. We don't think it's likely. We've had a recession every time CPI has been above 5%. We've had a recession in 10 of 13 of the past Fed tightening cycles, and Chairman Powell pointed to some of those instances where there was not a recession, but in none of those instances did we have an inflation problem.
You're focused on the macro, you're focused on inflation, but you've talked about the tightening cycle and where we are with the Federal Reserve. Do you think the S&P 500 has hit its low for this cycle? That was about a year ago, back in October, or do you think there's more to come?
No, we think there's more to come, and it's funny. You mentioned last fall, and at that point, our framework was telling us that basically because of Chairman Powell's comments about inflation being transitory, we saw about a 4 or 5 month dip in interest rates, which ended up feeding through. So we said if our framework holds, which it usually does, we should see a bear market rally happen. And so I was just looking back at some of our research from that time last year, and we were writing about how we couldn't convince anybody to be bullish. And now it's completely flipped on its head. So we have had that rally. It's been a little bit longer than we anticipated, but we think that's kind of running out.
We only have about 20 seconds left, but is there a danger, though, of missing out on it since it's almost been a year there if you missed that rally? We're advising people to get more defensive and a little, protect their portfolios and take this chance to really realign for what we think could be, a tough recession. All right. Katherine Krantz, Chief Executive Officer at the Center for the Macro Specialist Designation. Really interesting thoughts here for you to give to us today.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.